Hello, this is Andrew from Trend Following Mentor. In part of our series of education, free education, my goal is to try to help you become a better trader. There's several aspects of it. It's the using of indicators, very simple, robust indicators that are very powerful that many really haven't thought about, as well as how to properly think as a winning trader, or that many people really don't want to hear about, is called trading psychology. In today's short lesson, we're going to talk about how to really trade using the MACD. And it's a very, very powerful indicator, which I want to share with you. Let's jump over to Metastock. I like using Metastock. It's just very simple to use and very clear. First idea, let me give you the idea of the MACD. If you're above the zero line right here, you want to be trading long. If you're below the MACD line, as in here or here, you want to be trading from the short side, or if you're trading, let's say, the indices, you want to be out. That, short trading is a little bit tough. It takes a little bit more skill, but you always want to trade with the trend. You always want to follow the trend. Again, if you're above the zero line, you're looking to go long. If you're basically below, you're looking to go short. The other important issue, whenever I put on a stock trade, it isn't just, I look at a lot of things. I look at the market. I want to say, should I be in the market or can I not be in the market? And I have a very simple rule. There's two caveats of them. I look at either a 200-day moving average if I'm above that, which are these simple moving averages, like here, and you can change it to a 200-day moving average, or very simple, we can do it as we're talking. Let's just do this. You want to be in the market. And if you're below it, you don't want to be in the market. So that's rule one. Or I have another, actually it's in a short report that's on Trend Following Mentor blog. It's a course, a little mini course, how to really trade with a 10 and a 30 period moving average to keep you on the right side of the market. But once you know which right side of the market you're on, then when you're going into a particular stock, let's say you want to be in the strongest stocks, you want to make sure not just that you're above a zero line, but the MACD is increasing. Like, look at this point where the MACD is decreasing, or decreasing here. You might want to second guess yourself or say, you know what, hey, maybe this uptrend really isn't so strong. So if you want to go long, you want the MACD to be positive and increasing. Very simple trading with the trend rule. Something very, very cool with MACD that most traders really haven't learned is that there's divergences. And it's so cool that it gives you a heads up on what could be happening in the markets. An example is like this, very simply. And again, I want to say this. There are no perfect indicators. There is no perfect methodology. There's no perfect money managers. Nothing perfect. But it gives you an idea. And it's called a divergence. The example is you have low here and a lower low here. But if you look on the MACD here, you have a lower and a higher. I'll repeat that. You have a bar chart, you have a low here, and then you have a lower low here. Yet, the divergence that's showing right here on the MACD is showing a dichotomy. It's showing you that there's strength happening here. That, you know what, hey, this down move is in question. This whole down move might not be happening. It could be a fake out, that you're below this 200-day moving average, or you're below here with your shorter term moving averages. But you know what? Look at this move. And you had it took off, tested, and then you had a nice long move up. So the MACD is a very powerful yet simple indicator. In my professional trading in which I manage money, I use it as a confirmation that if I'm going to go long, I will only take the trade. I'm not going to take a long trade down here. I will only take a long trade if it's above. And also I want to see that it's increasing. It's showing me some more strength. It's showing me that good things are happening. The other issue too, as a heads up, as a review, that you can have many times these divergences. Here's an example, a positive divergence. You have a low and a lower low, a low and a higher low. But you know what? Look at this, which is really cool. Just as much as we had this positive divergence here and here, you have a negative divergence. Look what's happening here. High and a higher. but look at your MACD, high and lower. It's showing you that there's some weakness coming around, that you need to wake up and get a little bit, a little bit more careful. This is what some of the things that you learn at trendfollowingmentor.com. We have a home study course. We have one-on-one mentoring, where myself or one of my colleagues, we do private lessons with you. And the other issue too is we have these hot reports. That there's a hot report coming out very soon, which is called Avoiding the Next Bear Market. These are short reports. They're very inexpensive. They're very powerful. And I invite you to come to trendfollowingmentor.com and to learn. There's many free videos. There's many posts on the blog that are free. And the idea is to help you become a better trader. As well as I have a book coming out with Wiley Books in the fall calling The Bible of Trend Following, How Professional Traders Compound Money and Manage the Risks over time. I invite you to come to, again, it's trendfollowingmentor.com. We're here to help you and to help you become a better trader. Thank you.